This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shahin.
Good day. This is Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. My job is to go over the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go on our Knowledge Center, which gives you a direct link to YouTube, where we've had well over 1 million views, multiple videos that help answer the questions that you have. And if you want to put an inquiry so we can talk about it on the show or create a Knowledge Center video, please send your inquiry to radio@falconwp.com. That's radio@falconwp.com. And also you can go get this episode, any one of our previous episodes on Spotify, podcasts, you name it, folks. Now, I'm the president of Falcon Wealth Planning. We are a fee-only, non-commission, true fiduciary, folks. And we talk about all important topics of personal finance. That's where you are today, how retirement looks like, investments, estate planning, insurance, folks, you name it. Anything that involves a dollar sign, we can help you with. And we are offering 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost to help relate this show to your specific situation. And we have offices all across the country that we can help you with. Folks, give us a buzz. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help answer those questions that you have to help with your financial situation. Lots to talk about today, folks. Always something going on in the news. Now, I feel like we got a lot of positive things going on. We have some tech companies hitting all-time highs, such as Tesla and Apple and a few others. You have actually NVIDIA doing well as well, even though it seems like for the past 6 months it's done nothing compared to the NASDAQ and so on. All-time highs all the way across. Bitcoin hitting 100,000 plus and so on. Just so many different, feels good. It feels different, right? Consumer sentiment is actually feeling a little better. Retail saying they're seeing some spending happening. We all are feeling a little bit more rich, aren't we? So it's like, what is happening? We even have certain things. They say, go woke, go broke. You're actually seeing things now where you have people actually that were getting in trouble for certain crimes, or like that kid in New York who killed somebody by strangling them because they were a bad person hurting somebody who's actually been acquitted. So you have certain things that are going on. And then you have in the news, you have what's going on with the CEO of United Healthcare getting, quite frankly, assassinated, them finding the person. And then look, the nerve of these people. They actually came out with a cryptocurrency after the individual, after the CEO, named after him. Like, who does this stuff? I wish they could find out who does this. That is so inappropriate. And yet again, people are buying them. I'll take it a step further. Haley Welch, who's famous for that Hawk Tuohy girl, is actually in a terrible situation for a pump and dump scheme, 22-year-old, for a pump and dump scheme from Hawk, a blockchain on Solana that is actually instantly plummeted. It's crazy when you start seeing this, especially with the SEC, on these allegations of all the crap that's going on right now. It kind of feels like almost a bubble. Things are too good to be true. They probably are. All I'm trying to say is, what are you doing? Are you sitting in a cash position right now? Are you just riding the S&P 500 or in your target date fund? Are you doing any type of reanalysis of your portfolio of where it stands today? Because there are so many things that are coming out. You got this private debt, you got private credit, you have real estate transactions starting to pick up a little bit from a historically speaking point of view that normally slows down during the fall is actually picking up, and you still have certain areas with inventory issues. And you're starting to see some stabilization in real estate as well. You have almost every aspect, outside of interest rates, of course, because those are kind of dropping a little bit. Those money market accounts, maybe that's what it is. The money market accounts right now, the rates on that are slowly dropping. That's what happens when the Feds lower their rates. And so people are maybe looking to deploy some capital. I just don't know. I frankly don't fully understand what the hesitation is for people always looking to put their money to work. And here's the big and part, diversifying out their money. You know, I feel for people under $2 million, they should try to keep their money as liquid as possible. And what does that mean? Investing in their 401k, their IRA, their retirement accounts at work, that's kind of like blindly just saving money. And you know and plan, and you have licensed professionals that can help manage that and pay you out throughout retirement from that. You can even do it yourself at your custodian, whether you pay yourself monthly, quarterly, or annually, whatever makes sense. And of course, there's tax withholdings and so on. So that's an easy way for you to save. Then you got your house, right? People want to save for a house. They have a house. Maybe they pay off their house. Don't aggressively work to pay that off because of lower interest rates potentially. But the idea is you are paying that off if you're paying the minimum principal and interest payments. You are paying that off regardless. So it's like, okay, there's that as well. Well, let's kind of detour a little bit. What about the people from $2 to $5 million? These are people that probably look to get some real estate, some rental properties. These are another way that is a form of diversification. It's logical. It makes sense. But yet again, you have to take that step back. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth. Here on every weekend, we're talking about all important topics of personal finance. And I'm talking to you just today about everything that's going on in the markets this past week. And it seems like so much positivity is happening. Right, sure, we got some good days, some bad days in the market. I get it. But in general, this year, the market has flourished and it has gone up. And it's almost every segment. We're talking about S&P 500, Dow Jones, NASDAQ. We're talking about mid caps, small caps, international. We're talking about real estate, gold, Bitcoin. I feel like almost every asset class is hitting all-time highs. Man, that makes me like nervous, right? Just like whenever things are going too well, it's like you had to second guess. So I'm just mentioning about some diversification. And maybe, just maybe, because we're now seeing our money market rates that were at 5%, maybe at 4.5% to 4%, maybe even high threes. Now we're looking to put our money and deploy it a little bit more, especially with the confidence after the election, whether you're for or against President Trump, regardless of what it is, you are seeing consumer sentiment happy. So we have to think. Depending on how much money you have, I said if you have under $2 million, keep it simple, stay in a liquid investment in the stock market. It's easily regulated and it has a proven history of well over 100 years. And as long as we believe that companies are in business to make money, then the stock market does go up over time. Doesn't mean it can't go down, but depending on the amount of stocks and bonds and diversification, you are in a safer position than potentially other investments that are out there when you factor in the return that you're getting. There's this whole modern portfolio theory that was a Nobel Prize given to Harry Markowitz many decades back. So that was a long regression. I said when you have under $2 million, you should be investing like that. Between $2 to $5 million, now you start thinking to yourself, now you're what's called an accredited investor. So now some people are trying to sell you some different type of investments. I say, to me, $2 to $5 million, I'm sorry. Like, that's not super high net worth. Respectfully. It's really not. You're doing very well for yourself. You should be very proud of yourself. But you shouldn't try to overcomplicate your life. I would recommend at that point, maybe it does make sense to get a rental property just from a diversification point of view and a different type of income point of view. And I'm probably assuming you are in a high tax bracket and there's a lot of tax benefits to rentals. So it could make sense. Let's take it up a notch. Let's say $5 to $10 million. These are people that are actually called qualified purchasers. These are considered the last tranche of wealthy people. These are the people that invest in just like unique things, like pre-IPO investments. Or they have this investment where they own the fractional share or 1% of a new startup company. These are the people that get pitched sometimes at angel investing. But these are like the smaller peons, though, $5 to $10 million. They really shouldn't be doing these type of things, but they have so much money that most of the time they know they can retire, but they want to try to get more return. So they're trying to do some unique investments. It could be their favorite restaurant looking to go nationwide. It could be a company that they know or a friend that's starting a company where you get their Series A starting fundraising, safe notes, and all this other stuff. Okay, I call it crap, but whatever. And then you get K1s on an annual basis from those. So these are people that are looking to do more. It's not necessary to do that. It's really until you start to go north of 10 million, which I'll talk about, we're going to take a quick break, where I'm going to talk about the more of the things that you should be looking at when you're in that situation. Because what you don't want, and especially for people that are always trying to find the next big rocket ship who cannot afford to take the risk. These are the people that sometimes try to keep up with the Jones, or they think they know what they want, where they really start significantly impacting their financials. These are the people that buy every IPO that comes out. These are the people that jump into SPACs without fully understanding what they are. These are the people that buy the investments because they're seeing certain recommendations or commentary on Twitter or X and on Instagram. This is where you always need to take that step back and reassess your situation. So let's talk about, now we're starting to get into the ultra high net worth. Let's talk about the next step of investing for people with 10 million and up. I'll be right back after a few words. This is Gabriel Shahin, certified financial planner and president of Falcon Wealth Planning. We wanted to offer you a free financial assessment for listening to the show so you can help relate it to your specific situation. We offer multiple services such as retirement planning, where you are today, how retirement looks like, talking about Social Security, real estate, planning, even if you own a business, talking about taxes, not just how to save money today, but also throughout retirement. Talk about investments, making sure you're avoiding those high fees, costs, commissions, and also estate planning and insurance, just making sure you're properly protected if, God forbid, something were to happen. And we're offering 1 to 2 meetings, 1 to 2 hours of our time at no cost. Give us a call. We would love to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, and fill out the form fill right there on our site. We would love to help you in your financial situation. We look forward to serving you. Welcome back, folks. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. And I'm just talking about all these things that seem to be going great right now. Then we had recent almost fraudulent activity by that YouTuber, by that hot Tui girl, Haley Welch. She's only 22 years old, but we got some serious SEC probably issues going on right now because she, in fact, got in trouble for a pump and dump scheme after a 95% drop. So it's just kind of crazy. It was almost 500 million before crashing to a market capitalization of about 25 million, but it's just crazy how so much money could have been just evaporated. So we talked about a certain segment of people that really shouldn't be taking that type of risk, which is 2 million and under. And also looking at 2 million to 5 million, where maybe it's a good idea to start getting some real estate involved. Then 5 to 10 million, where maybe you start to get involved with maybe some pre-IPO and SPACs and stuff like that. But maybe that's just for you dabbling. We're not saying if you have $8 million to put 1 million in one of those things. It's just diversification. Because if in fact you have, for example, $10 million, you put $100,000 into something, that's 1% of your portfolio. Like, I understand 100,000 is a lot, but 1% of a portfolio you can afford to take risks, including something like a Bitcoin or whatever the case may be. Now you got that next tranche of $10 to $25 million. These are the people, some weird way, they love individual stocks. They know, and they're smart enough to know. Typically, if you have over $10 million to $25 million, you're smart. They know that it's high risk and high reward. And they know, and they can afford to invest in something and have it do nothing for them, lose it all, or could actually make a good amount of money. Now, the difficulty with these individuals is they maybe double their money 2 to 3 to X, and then they get out. And they miss the massive 10,000, 20,000% increases like we've seen on some investments like Apple over time, Amazon over time, Microsoft over time, and of course now recently NVIDIA over time. I'm just saying that it's interesting to me that the subset of people all kind of do the same stuff. And then it's funny how the strategy and execution is completely different. If you're going to want to take that risk, Take the risk. If you're trying to get 2 to 3x and find that next 2 to 3x, you don't make your money on a 2 to 3x return because you only did that for a small percentage of your portfolio. You make your money not on a 200 to 300%, but a 2,000 to 20,000% return. So if you're going to invest that way and keep trying to look for the next hot thing, the irony is your rate of return over a 10-year period significantly underperforms the S&P 500. So this is where you have inexperienced rich people, right? 10 to 25 million is rich. And oh, by the way, these are the same people that have multiple different properties, I must add. They just do. Nothing's wrong with it, right? But they do have that house for skiing or that house by the water. And nothing's wrong with that. They deserve it. They got a lot of money. But then you start going into the next tranche of 25 million to 100 million. It's a big tranche. Not a lot of people are there. And these are the true ultra high net worth. It's funny how you'll hear people 10 to 25 million say they're ultra high net worth, but they're really not. Heck, they don't even have an estate problem, an estate tax problem. Sometimes I have people sit in front of me, I have this really complicated situation. I have a lot of money. I'm worried about estate taxes. I need complex estate planning strategies. And I'm just thinking to myself like, oh, okay, yes, that sounds really good. And I'm like, dude, you're under 25 million. I don't tell them that. I'm not trying to get an argument with them. But it's not complex. And granted, I'm not an estate attorney, but that's not even here or there. It's just they're trying to explain to them their situation is different and complex. It's when you start going 25 million to 100 million where it really starts to get complicated. It's that 8 to 9 figure wealth that is an issue when you do have to start to be very strategic. So these are the people that start to think more long term of how to protect their money and grow. And these are the people that realize, think about the psyche, over 25 million, where they need to start relying on a professional. So their whole psyche changes because they have to hire an estate planner that works with ultra high net worth individuals. Why do I say 25 million? Well, because you get, let's just say, a $13 million exemption between you and your spouse. That's 26 million. So I just round and say 25 million. You're only allowed to have that. Anything over that, you're subject to a 40% tax. You get why now I say it? So now because they're paying somebody for their brain, for their professional recommendations, and because they're now doing that is why they now start to think, maybe I don't know everything. They start to listen to a professional. Normally, these type of people over 25 million are the smartest people in the room. Well, now they may be very smart, but when it comes to an estate planning, let alone investments, they may not be. They may be smart enough to be dangerous, but they're definitely not smart enough to know everything. They made their money doing something else. So all I'm saying is, very clearly, these are the people that now try to re-simplify their life versus having 19 different investments with a K1 from 19 different things, from a restaurant here, from a real estate apartment complex there, to a company that you believed in there, to angel investing over here. They want to simplify their life. I say it all the time. People spend the first 20 years of being rich, accumulating all this crap. They spend the next 20 years of being rich trying to decumulate and simplify their life, especially when they start thinking about next generation. Or maybe their spouse who is just not as interested as you are in growing wealth, managing wealth. And more importantly, you're in a situation now where you start looking to, number one, preserve wealth, and number two, start to think and realize, my kids don't need all this money. Warren Buffett says it best. I want to give my kids enough money where they can do anything, but not so much money where they do nothing. There is a balance, any way you slice it. And this is when I start to see everybody happy and the markets are going up and up and up. And it seems like everything you touch is turning to gold and making you money. This is where people get greedy. And yet again, going back to my boy Warren Buffett, is a famous saying, when those are greedy, be fearful. Because those of you who are worried and fearful during the elections, that's where you want to be greedy. It's when those are fearful and those are scared and when the markets are dropping and terrifying, that's when you start thinking to yourself how you should be investing, what you should be investing in, what has dropped so much and has the opportunity for the best expected rate of return following the market drop, an economic drop. It could be a recession or even a depression, which we haven't seen in quite some time. 100 years almost, might I add. So it's just looking at your situation and understanding based on what tranche you're investing in, how you should be investing. And forget all the nonsense, forget all the rocket emojis, forget all that crap. Putting yourself in a situation where you can have your portfolio customized to you. I'm telling you, rule of thumb. Whatever I said, that was based on liquid profits. What if you have a business that's worth 25 million, 50 million? You might have no cash because you're reinvesting it into the business. You might have no investments, but a bunch of cash because you need cash depending on something that happens to the business. You might lose a big client, or the market might change, or a rule or policy or law may change that affects your business. You may be able to open another office or retail store for $100,000 and it will make you $100,000 a year. That's a 100% rate of return. Are you really excited about the S&P 500 making you 10%? Probably not, but you need business diversification now with liquidity. These are the different concepts that people don't pay attention to. They would rather just follow these meme stocks or just see what's on social media and follow the next hot thing. And what happens? You get pounded by fraud. And it doesn't fail to surprise me. People are naturally greedy and they have no core strategy to investing, which is why we always say to partner up with a professional, to partner up with somebody who does this every day, to partner up with somebody who's actually seen this movie before. It used to be gold scams. Now they have what? Crypto scams. Like I said, they just created a meme after the assassination of the United Healthcare CEO. Who does that? And you would actually buy that? That's disgusting. I'm sorry. Versus a Bitcoin or an Ethereum or whatever to put into your portfolio. I mean, those two are the largest of the market capitalizations, probably 85%, just those two alone. But to be able to put your money into a diversified approach to see how much makes sense for you based on your situation, based on, hey, how are your kids? Are they educated? Do they have good jobs? You're going to have to support them. You're going to have to help them buy them a home. It's not just you. We're talking about generational wealth and management here. And this is where you need to take a step back, analyze your situation, make sure you're not being duped just because you used to be see it on TV or in the newspaper, and now as you see it on social. Most of the things you see and read are absolute garbage and crap. So beware. Do not put yourself in a situation to harm the money that you worked your butt for, folks. I'm telling you, it is not worth it. That was a fast show, folks. I want to thank you for tuning in with us this weekend. You can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go and visit our Knowledge Center, which redirects you to YouTube. We have over 1 million views, folks. And if you want us to discuss anything on YouTube, on the show, whatever, send your inquiry to radio@falconwp.com. That's radio@falconwp.com. And if you want this episode, any one of our previous episodes, you can go on podcast, Spotify. We have them all there. And folks, we want to thank you for your trust. We want you to feel free and feel comfortable to reach out with any questions that you have.